Recent developments across the global cryptocurrency landscape highlight a period of significant regulatory, market and technological shifts shaping the industry's trajectory into 2026. While Bitcoin remains above key support levels, traders are closely watching upcoming events and policy changes that could influence prices and institutional involvement. In the realm of regulation, the U.S. SEC continues to crack down on industry figures, with Caroline Ellison, former CEO of Alameda Research, receiving a 10-year ban from holding leadership roles, along with 8-year sanctions for FTX executives Gary Wang and Nishad Singh. These measures stem from allegations of misappropriating customer funds, reinforcing the SEC's stance on accountability. Meanwhile, in Europe, the European Central Bank plans to enable on-chain digital euro transactions starting in 2026, sparking debates over privacy protections as the continent pushes toward a digital currency framework. Globally, China is notably reducing its holdings of U.S. Treasuries by $44 billion over 5 months, while accelerating gold acquisitions, signaling a strategic move away from dollar dependency amid mounting geopolitical tensions. Concurrently, the BRICS coalition, particularly China, is diversifying reserves, and economic forecasts suggest a possible influx of about $4,000 in tax refunds to U.S. taxpayers in 2026, potentially fueling consumer spending. Market activity reflects a mix of cautious consolidation and strategic shifts. Notably, the biggest Bitcoin options expiry of approximately $23 billion this Friday could trigger short-term volatility, as traders prepare for potential sharp moves. Yet on-chain metrics indicate that recent dips are driven more by market structure and stablecoin-dominated shorts rather than widespread selling, with Bitcoin's supply dynamics entering a new phase of long-term holder distribution and miner stress. An unusually large Coinbase wallet movement involving 800,000 BTC temporarily distorted long-term holder data, but corrected analysis shows typical distribution patterns resuming. Investors are also paying close attention to institutional developments. The launch of crypto ETFs, particularly index-based products, is expected to dominate in 2026, after attracting over $70 billion since early 2024, as regulators loosen their grip on single-asset approval. Countries like Poland are passing crypto regulation bills aligned with EU standards despite political hurdles, signaling growing acceptance. Technologically, bullish forecasts remain, with Citigroup projecting Bitcoin could hit $143,000, and aggressive research from Fundstrat estimating potential highs between $200,000 and $250,000 driven by institutional adoption. Conversely, some analysts warn that 2026 might be an off year, with Fidelity's models indicating possible price declines to $65,000 to $75,000 due to structural and supply factors. Ethereum's on-chain activity has surged despite stagnant price.